my common sense tells me that there will come a point with the Fed spending the way they are and the way that I believe they have to continue, there will come a point where the rest of the world will collectively say no more dollars in trade. And not to say that the rest of the world will refuse to trade with America, but we're probably going to find out for sure whether America really has 8,000 tons of gold. Because I can see a day coming when countries like China, like Russia, like Germany, like other countries in the European Union say, we're willing to continue trading with you, America, but we just don't want dollars anymore. You're going to have to pay us in something else. And I think that day is fast approaching. My concern really, Dunnigan, is whether the people who are in control of the dollar, whether that is read as an act of war. If you start producing too many tens of trillions of dollars observably, people lose faith. And when people lose faith, the dollars come home. And when the dollars come home, you end up with hyperinflation in your domestic economy. And that's what central bankers, believe it or not, in America are kept awake at night, pondering and worrying about. When will the dollars come home and how are they going to handle it?
Welcome back to Liberty and Finance and Reluctant Preppers. We have a returning guest who is always a favorite among our viewers. Rob Kirby, a proprietary analyst and founder of KirbyAnalytics.com, is back with us this Tuesday, June 16th, 2020. Rob, thanks for joining us.
Pleasure to be with you again, Dunnigan.
We are in interesting times.
Sure we are.
A lot of our viewers have been submitting a lot of questions ahead of this interview. They want to know which end is up going forward. Some of the questions have to do with the gold and silver markets in general, the strange interventions we're seeing in the equity markets by central banks. But if you could start us off, because there's one that's specifically about Canada that comes in here, and that's about countries like Canada who have gotten rid of their gold reserves and how that's going to leave them situated in the times that come. So there's multiple questions here asking about countries who, like Canada, have divested themselves of their gold reserves. Can you talk to us about how that came to be and where that leaves Canada or countries like in that situation, situated from as far as a strength or weakness standpoint, depending on what the economic and financial world changes are that are coming ahead?
Well, what happened to Canada's gold is a great question, Dunnigan. We used to have roughly 650 tons of sovereign gold in Canada years ago, but we gave our gold away in the 1980s. And there's some great reference points that your listeners and watchers can go and Google to search and actually read the story about this. The first thing you want to read, you want to Google the name Ed Steer, who is a name you'd be familiar with, and an essay called "When Irish Eyes Are Smiling," and you should find that in the archive at Gold Eagle, because Ed wrote a piece which I found completely fascinating about it. And then I wrote a piece on it myself, and my piece was titled Moscow on the Hudson, which is archived on my site. And it used to be archived, I know, on other sites, but I don't know exactly where it is today, so other than my own site. So anyway, the story goes like this. In the 1980s, President Reagan, amongst others, was very endeared with the concept or the issue of defeating the Soviet Union, having capitalism triumph over communism. And the way that President Reagan went about destroying the Soviet Union was to basically take their allowance away. And the Soviet Union, understand, in the 1980s was a closed economy, and they could not feed themselves, so they had to have trade with the West to buy food to feed their people. The only thing, there were two things that the Soviet Union had at the time that the West would purchase from them, and only two things, and that was crude oil and gold. And the prices of crude oil and gold had run up significantly in the very early 1980s, which was effectively increasing the allowance of the Soviet Union and allowing them to compete militarily with the West. So the Americans hatched a plan with the support of the Vatican, with the support of Canada, with the support of other Western nations, Britain in particular, and they basically hatched a plan to rig the price of crude oil and gold down to put a crimp in the Soviet Union's, call it, treasury, and basically force them into a compromised situation financially, which basically ended the Soviet Union as we know it by crushing the price of gold and oil. The treatise that Ed Steer wrote, When Irish Eyes Are Smiling, goes into the detail of how Canada's gold was sacrificed and basically thrown into the market at fire sale prices to drive the price of gold down. Because to knock the price of gold down dramatically, they needed more than simple selling of futures. They also had to have some physical gold to back up the sales in the paper markets, basically to justify them. Now, this is another reason why, just for your guide, this is another reason why I'm very dubious about American claims to possess over 8,000 metric tons of gold, because I rationalize it like this. If America wanted to do this and wanted to remain really, really tight-lipped about it, why in the heck did they need 650 tons of Canadian gold if they had over 8,000 tons themselves housed at, West Point, Fort Knox, and the Denver Mint? It doesn't make sense to me that something that you'd want to be really, really hush about, that you'd include a relatively small player like Canada with 650 tons of gold if you've got 8,000 tons yourself. It makes me really wonder whether the American claims about possessing 8,000 metric tons of gold, whether they really have it or not. When they had to come calling, or when they did come calling factually on Canada to be a part of this scheme to drive the price of gold down. Anyway, it's that's the story, and I've given you the reference points if you want to go and check it out, because the essay that Ed Steer wrote was really, really awesome. When Irish Eyes Are Smiling, and it's about and When Irish Eyes Are Smiling actually is the title of basically, or it was the moniker given to a meeting between our Prime Minister at the time, Brian Mulroney, and President Reagan. I believe they met. It was called the Shamrock Summit. And Mulroney being of Irish descent, they referred to it as the Shamrock Summit. I believe it was held in Quebec, Canada, where they met, and that's where this plan to rig the price of oil and gold and to knock their prices down. That's where this was hatched. And anyway, it ultimately led to the demise of the Soviet Union. So maybe it was a good thing that we rigged the price of gold and oil, if it meant sort of the end of the evil empire, as Reagan used to refer to the Soviet Union.
So that would be the story of where Canadian gold went. What do you think what position does that leave Canada in a new financial order coming that may emerge from all this crisis that we're going through?
Well, it's sort of like having a gun with no bullets. I mean, Canada produces gold every year. I mean, we produce as a country, we produce roughly 200 metric tons a year from the mines in Canada. But I mean, you know, our government in their reserve account holds none, or for all intent and purpose, none. I mean, the Royal Canadian Mint does have a program where they produce, you know, gold maples as our sovereign coin, and those are collected universally around the world and are in very high demand. But we don't have sovereign stock, which the mint can draw on. The mint needs to basically buy gold in the open market to produce those maples. And, you know, let's just say our sovereign holdings probably don't amount to any more. I'm guessing maybe 5 or 10 tons, which is nothing. It's basically working stock for the Royal Canadian Mint.
So in a currency crisis that we seem to be hurtling towards, with the American central bank, the Fed, printing 6 or 7 trillion in the last quarter, and other central banks around the world seeming to have to follow suit. Does that change the strength of Canada? I mean, where does that leave Canada as far as its ability to weather that future transition?
Well, yeah, I mean, Canada's economy is resource-led. We are an export-led economy, export/resource-led economy. Our biggest exports are crude oil, and the price of crude oil, if you haven't looked, not doing so well lately. And that basically is the hinge on which swings the economy in Western Canada. Things aren't doing well in the oil patch in Canada. And Canadian crude oil sells at a pretty steep discount to West Texas Intermediate because it's got a benchmark known as Western Canadian Select, and I think currently it's trading around $12 under West Texas Intermediate. But we never did go negative on Canadian crude oil. Like when West Texas Intermediate in the futures markets actually traded at minus $40 a barrel back about a month and a half ago, and that was very briefly as futures contracts were expiring in WTI, and Canadian crude oil I think got down to $5 or $6, but we've been under $10 quite regularly on Canadian oil now. In the last few months, we've been under $10 a barrel 2 or 3 times, and we're currently, I think, mid-20s, 26-ish dollars US a barrel for Canadian oil. But the Western Canadian producers of crude, they need probably $45 a barrel minimum to be profitable. So when you're only getting $26 a barrel, it's a pretty tough job to make it all up on volume. It's minus $20 a barrel. It's hard to justify turning the lights on. So the economy in Western Canada, highly dependent on crude oil and oil services businesses, hasn't been doing so well. So, and the fact that we don't have any sovereign gold, that's sort of, it's like, how many nails do you want to put in the coffin? Frankly, the financial outlook for Canada, I don't like right now. Not at all. I don't think the prospects look good here. With the price of crude oil, we have a spendthrift government that is spending dramatically, maybe not quite as much on a per capita basis as being spent in America, but an awful lot for us to handle as a smaller country with a much smaller population and a much smaller GDP. And with a very, very, like, our economy is not as diverse as America's. But right now, Dunnigan, the whole world seems to be in a mess, and everybody's economy is hurting. And whether any country is going to really weather the storm well, and if we're ever going to return to let's just say an economy as it was prior to the beginning of this year, I have my doubts that we're ever going back to the way it was. And I think the world's a different place now, and it likely remains a different place for the foreseeable future.
We have a couple of questions since you mentioned struggling factors on the Canadian economy. A couple of questions related to that as far as how it will affect Canadian real estate. Sally Maynard says, I live in Alberta, would like to ask Rob if property prices will come down in the Edmonton area. Will prices fall? And if so, when does he see that happening? Similar question from Age of Information saying, where do you see Ontario or Canadian real estate headed after the mortgage deferrals end? So I'll stop there and let you respond.
My view on real estate is extremely negative. Both corporate real estate and residential real estate. I don't really think that the full effects of the lockdown, virus-related lockdown, has been truly felt or experienced by the economy at large as yet. We have government spending, basically, income replacement programs that can only be temporary in duration. They will have to end at some point in time. And, the economy in Canada has not reopened as yet. It's beginning to, or showing signs of reopening sporadically, and not in all locations. Like, there are some rural regions in Ontario that are starting to reopen and allowing businesses to operate, but as yet not in Toronto, not in Montreal, who remain pretty much fully locked down, so far. I do not like the prospects of the real estate market going forward, as I said. But in all honesty, I have felt that way for about 5 years, and I haven't had it right. The fact that I haven't had it right, for quite a while, doesn't diminish my conviction that real estate prices will turn down, because if people aren't working, they can't pay their mortgages. And if people can't pay mortgages, financial institutions will start hurting, and they will rein in their, making credit available to the mortgage market. And when that happens, and people who are not employed are going to have to sell, and the demand for new mortgages is going to evaporate, in my view. I just want to stay away from it. I'm no time to go buy a house, in my view. Rent is probably a smarter option. But even renting, if you don't have income paying rent, and what does that do to the mortgage-backed security market? I mean, I think the mortgage-backed security market is in for a major, major tumble in Canada and in America. And I'll tell you something, Dunnigan, when I look at the Fed and their buying programs and look at what the Fed has been buying, in my view anyway, mortgage paper in America, the mortgage-backed security market, probably should not be trading any better than a double B, which would imply mortgage paper trading, say, 600 to 700 points higher than treasuries. But the Fed is purchasing mortgage-backed paper from Fannie and Freddie at par with treasuries. Well, buying something, 600 to 700 basis points richer than what it should be purchased at will have consequences, and they won't be good. So, I look for the fallout that's sure to come as a result of this kind of drunkenness, excuse me, on the part of the Federal Reserve buying this mortgage paper and paying up to the extent that they've been paying up for it. There will be repercussions down the road. How bad the repercussions are, we can only guess. But my feeling is, you can't get that drunk and not have a hangover. And to me, the purchasing of mortgage-backed securities and underwriting the entire mortgage-backed market, which is what the Fed has done, has to have severe consequences, and it will. And I bide my time.
The Fed is buying up basically everything in sight, the corporate debt, now municipalities and states and everything else.
Yeah, they're buying equities too.
Yeah.
I mean, they're buying everything. So, Dunnigan, my question is, at what point do people lose faith in the U.S. dollar? Because it's really a confidence game with the dollar as the world's reserve currency. And as the Federal Reserve's balance sheet expands, at the beginning of the year, the Fed's balance sheet got down to around $3.8 trillion. We're now, I believe, is it 6 or 7 we are now? But it's gone up. It's almost doubled in the last 3 months. And so my question is, and it's forecasted to be 10 or 11 trillion by the end of the year. So, my question is this. At what point do foreigners say they will no longer take dollars in exchange for trade, to settle their trade accounts? Is it going to be when the Fed's balance sheet hits 10 trillion? Is it going to be when the Fed's balance sheet hits 15 trillion or 20 trillion or 25 trillion? But my common sense tells me that there will come a point with the Fed spending the way they are and the way that I believe they have to continue. There will come a point where the rest of the world will collectively say no more dollars in trade. And not to say that the rest of the world will refuse to trade with America, but we're probably going to find out for sure whether America really has 8,000 tons of gold. Because I can see a day coming when countries like China, like Russia, like Germany, like other countries in the European Union say, we're willing to continue trading with you, America, but we just don't want dollars anymore. You're going to have to pay us in something else. And I think that day is fast approaching. My concern really, Dunnigan, is whether the people who are in control of the dollar, whether that is read as an act of war when the rest of the world says no more dollars. My thinking there goes to, you can't blame people for not wanting to take the currency of somebody who's perceived to be having gone stark raving mad at the printing press. Mm-hmm. This is what happened to Germany in the 20s. Germany produced too much money, too many Reichsmarks. And, for the longest time, everybody was willing and kept accumulating Reichsmarks. Nobody could envision in Germany in the 20s the notion of the Reichsmark being refused in trade. But, that's what happened. And you can't produce infinite amounts of your currency and be perceived by the rest of the world as being drunk at the wheel and expect them to continue taking your currency indefinitely. It won't happen. And America has, the most powerful military in the world. But, at some point, the rest of the world also is well armed. And when they band together and they just tell America collectively, no more dollars, what is going to happen? Is that when we go to World War? I mean, I sure hope not. But I mean, in my view, that is how this story will end. And ultimately, the dollar's future does not look good. And by extension, the Canadian dollar's future doesn't look good either. I mean, the Canadian dollar is nothing but a derivative of the US dollar. I mean, our economy, has some really, really negative drags attached to it right now. With the price of oil, the fact that our government is spending a lot of money, all this money that's being spent, governments are sparing no expense in trying to, right themselves from this virus, and all this money that's being spent, it's all borrowed money, and in my view, the existing debt. Before pre-virus, I believe that America had a debt that they were never going to pay off anyway. Not a chance. And now it's just doubly bad. And who's gonna pay the bill? And ultimately, I believe it's going to be paid in depreciated dollars. We're going to have a hyperinflation. To me, it is so baked into the cake now. It's absolutely unavoidable that we will have, a hyperinflation, and I believe that's baked into the cake, absolutely and for sure now, and it's only a matter of when, not if, only a matter of when. But to me, it's a guaranteed outcome, absolutely.
As far as countries who have not been cooperating on this death walk of the dollar, or let's say they have because they've gotten off that dependency, China and Russia for two. Jack Robert asks, $26 trillion in debt, China selling treasuries and opening the capital markets, Russia doubling gold and removing tax. What is next to destroy the dollar that might decrease the dollars needed outside the U.S.?
Well, I mean, what will kill the dollar is when countries band together. And when I say countries, I mean I'm thinking in terms of not likely one country will want to say no dollars in trade on their own, but I could see an amalgamation of China, Russia, maybe Germany, maybe India, maybe banding together and saying, you know what, guys, it's been a great party, but we can't take any more dollars. You're printing too many, and I wouldn't be surprised at all, Dunnigan, if these kind of conversations are going on behind the curtain right now.
That's the next question from Matthew C. Can you please explain about the World Conference that multiple world leaders attended and how it will affect all of us going forward?
Yeah. Well, my guess is very likely issues like, how well received the dollar will be going forward are very, very likely on the table. And they're very likely being discussed. And, it wouldn't shock me if a country or a group of countries align themselves and back a contending currency with gold, or with, maybe a basket of strategic commodities to back a currency. I could see that happening. And, it could be conceivably the euro, but more than likely, it'll be the Chinese currency. But who knows? What I can see is that, with each passing day and each passing week, with the ramping up and the money creation that's occurring in America, the American dollar looks less and less and less, suitable as the world settlement currency with each passing day. So, we're in a hole. We're in a hole, and the problem is nobody wants to put the shovels down, and the hole's getting deeper. And there will come a point where the hole will be deep enough that, it'll just be impossible to ever get out of. And that's, like I say, does that mean war? I hope not. Because to me, that's a game that nobody wins. So.
You mentioned the weakening Canadian economy because it's resource-driven, and there's been a lot of down movement in the cost of some of those commodities. Andy Innes asks about the U.S. side. He says, I see the U.S. has just posted its latest GDP figures, which show an astonishing drop of 51%. My question to you is, if the U.S. just posted a 51% loss in GDP, does that not automatically double the debt to GDP figure? If so, where does that now leave gold and silver with now an effective 220% debt to GDP?
Well, look, the price of gold and silver are absolutely wrong to begin with, okay? The price of gold and silver have been manipulated and suppressed for a very, very long period of time. I mean, we've currently got a gold-silver ratio of roughly 100 to 1, which means that the price of gold is selling at 100 times the price of silver. And that's gold at $1,700 and silver at roughly $17. For those of you in the listening audience, if you're unaware, for every ounce of gold that's mined from the Earth's crust in a given year, 8.5 ounces of silver are mined. Now, so what does that really mean? Well, to me, it means that Mother Nature would imply that silver is roughly 8.5 times more plentiful or available than gold. Now, also to throw on to that pile is the notion that virtually every ounce of gold ever mined is still, call it available, or it still exists in above ground form, either in jewelry or in coin or in a bar or in a vault somewhere. But silver tends to be consumed because silver is not just a monetary metal. It is an industrial metal, and it gets consumed in very small amounts on a per unit basis. And it goes into electronics, and it goes into solar panels, and it goes into mirrors. And as these things wear out or break, they typically end up in landfills in minute enough amounts where it isn't economically viable to recover it. So silver tends to get used up and thrown away. And so the point I'm trying to get to here is that there's more above ground gold visible in the world today than there is silver. And yet silver is making or has made historic highs in the gold silver ratio. Like at one point, a couple months ago, we had a gold silver ratio at 120 to 1. To me, that makes silver perhaps the most undervalued asset on the planet. And if I'm a buyer of things, or if I like value investing, to me, silver is an outstanding purchase. At these levels, historically, when I look at the way, like in Canada years ago, the Canadian Mint used to produce gold coins, and we had, I believe we had a 1/4 ounce gold coin that sold for, when gold was $35 an ounce, silver was valued at, I believe, it was $1, I guess, for a silver dollar in Canada. And a silver dollar in Canada, when we had silver in currency, it was, 0.8 of an ounce of silver was $1. And you could buy an ounce of gold for 35. Well, that's a ratio of, call it 40 to 1. But I mean, here we are at 100 to 1. And we've been as high as 120. Like to me, the price of silver relative to the price of gold, I think both metals, because so much money is being printed, I think the prospects for nominal price appreciation are fantastic in both metals. But I think silver on a percentage basis likely outperforms gold as people start rejecting the dollar. So that's where I think we're headed.
This year has brought tremendous changes to a lot of our lives. You mentioned the economy not yet really opening up in Canada. A lot of restrictions have been clamped down on people's movement, their ability to operate their businesses. It's affected people's jobs. It's affected people's ability to pay their mortgages and so on. So a lot of things are different from what we've seen in the past, and so people are notably thinking, maybe the future isn't going to look a lot like the past. Maybe there are big changes coming. Sportgus.com says, the globalists would like to see the average person dependent on their system. What strategies do you think they will employ to strip or diminish the value of owning physical gold?
Well, I mean, the globalists are the moving force behind what's known as the New World Order. And the New World Order, which was referenced by George Herbert Walker Bush years ago in the 90s, when he spoke of the New World Order, the New World Order is a totalitarian concept where you have basically one world government, one world currency, and one world religion, which is the worship of state itself. It's very similar in its the way it operates. The way I read it, it's very similar to a totalitarian communist system, which is very much like what China has today in its governance. And I mean, the likes of the luminaries that were or have been associated with being at the head of the New World Order, the Illuminati, are the names like Rockefeller, the names like Rothschild. And I mean, David Rockefeller was an admirer and vocal patron of Mao Zedong. And, he believed that Mao was a great model for the rest of the world, the model that Mao oversaw in China. Not for me, thank you very much. But I mean, before you can have a new world order, you must destroy the old world order. And this is exactly what this grand design of destroying the old world order. See, I personally believe that this virus is I think it's manufactured. I think it's created by man. I don't think it came out of nature. I think it was created in a lab, and I think it was dropped on humanity as a means to bring us down. And it also, I find it very interesting, Dunnigan. A year ago, I was writing in my materials that I was writing that we had inflected in money growth. We had inflected and moved on to a vertical growth curve for money, and that money had to be created. And this was in addition to and runs parallel with the notion of the missing money that Catherine Fitz and Dr. Mark Skidmore talk about with the missing 21 trillion. I've contended all along that money was created because the central bankers in America, the people who are in charge of the Federal Reserve, who model everything, they knew that money supply would inflect and go vertical. And they knew that they were going to have trillions upon trillions hidden away in slush funds that they were going to be able to mobilize and put into the system, lest the whole dollar system collapses. And my guess is they've probably run through that money, which they had hidden away in, salt mines like the Exchange Stabilization Fund, the secretive adjunct to the U.S. Treasury that is beyond oversight by Congress and reports to nobody. They've burned through that money, and they had to create they had to create many trillions more. And last year I wrote about it, and I said, and in interviews I said, they have to create way more money. And, but there was no virus when I was saying this. But, isn't it interesting that and think about it this way. If they had created a $6 or $8 trillion in 3 or 4 months without a virus, would humanity have stood for it? Would Americans not have rioted in the streets? But we have a virus, and now they seemingly can produce any amount of additional fiat money, any amount of trillions more, and nobody's complaining. But I mean, my whole argument or my whole thesis is this money had to be created anyway. And if we didn't have a virus, the money was still going to be created. They needed to have a justification for creating it. And isn't it amazing that the virus came along right at the time when they were going to have to create many additional trillions? And here's the excuse. Anyway, the way this is going to play out, my thesis, taking it another year forward, I say they have to produce more money next year than they did this year. So let's see how much more they produce. And if I'm correct in my thinking, it's going to spell the end of the dollar. Because I say they have to produce much more next year again than they produced this year. Because the amounts are going up vertically. And the amounts that have to be created. And this is the flaw that is built into fiat money with compound interest. Fiat money with compound interest, in its very design, it's designed to fail. And the designer of our current monetary system, John Maynard Keynes, he knew this. He was told this. And he was a reprehensible sort, a very disgusting human being, and he didn't care. And when it was pointed out to him years ago that his system by its very design would fail, he said, I don't care. In the long run, we're all dead anyway. Well, the problem is we're in the long run right now. And, the money growth has to remain vertical, which means dramatically more money needs to be created every year. And the flaw in fiat money with compound interest is that when new money is created, it's always created with debt. And when you create the debt, you don't create the interest that's due on the debt at the same time. And that leads to an ever-expanding supply of money, or the system collapses. And that's where we are. And the money growth that needs to occur, it becomes unsustainable. Because, ultimately it comes down to you have to create so much new money, there's nowhere to put it without it triggering a hyperinflation. And in history, that's exactly the way fiat money regimes end, because they all encounter the same problem. Time comes that you have no place to put the money. And it ends up impacting basically the economy that creates it. Now, America's been able to stave this off for a long time because America's biggest export is dollars. America exports their dollars to the rest of the world. Everybody holds dollars. Everybody trades in dollars. But, that works as long as people are willing to hold them and people believe that the dollar will maintain its value. But if you start producing too many tens of trillions of dollars observably, people lose faith. And when people lose faith, the dollars come home. And when the dollars come home, you end up with hyperinflation in your domestic economy. And that's what central bankers, believe it or not, in America are kept awake at night, pondering and worrying about. When will the dollars come home and how are they going to handle it? So that's where we're headed.
Rob, we always appreciate you giving us your sobering and feet on the ground, insights into what's heading our way, because we're not going to hear this from standard sources. Folks, if you want to be able to help us keep this message going out there, please go to patreon.com/reluctantpreppers and become one of our supporters here. You can also support Rob at his site, which is kirbyanalytics.com. Rob, as always, thank you for joining us here on Reluctant Preppers and Liberty in Finance.
Been my pleasure.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.